Good morning or afternoon, depending on where you are, and thank you for joining today's webinar, Financial Planning and Analysis for Law Firms. I'm Megan Turco, and I'll be your moderator today. Before we jump in, I'm going to briefly go over how to use your webinar console. The orange arrow on the right side of your screen will let you toggle the control tray open or closed, and at the bottom of the control tray, you'll see a chat window. Please feel free to submit your questions at any time throughout today's webinar via the chat function, and we will get to those during Q&A towards the end. Additionally, on your GoToWebinar console, you should see an area for audio settings. If you're calling in through your telephone, please choose the Use Telephone option. And alternatively, if you're using your computer speakers, please select the Use Mic and Speakers option. And lastly, I do want to note that today's webinar is being recorded. If you have interest in sharing the slides with any of your colleagues who couldn't make it with us today or accessing them after today's webinar, we will send out the slides as well as a link to the on-demand recording of the webinar within about 48 hours, so definitely keep an eye out for that message. And with that, I'd like to introduce today's presenters. We have first up John Dunnican, who is a financial advisory partner for Armanino. John has over 30 years of financial, executive, operations, and consulting experience in public and private companies. He's held numerous high-level positions and has extensive experience in management, financial, and operations. Next, we have John Sweisberger. John is the executive director of Armanino's Law Firm Services Group. He has nearly 35 years of experience with a focus on firm strategy, shared services, and process design and reengineering. Also with us today, we have Masha Zhandalinova, sorry about that, Masha, who is a senior consultant on Armanino's Law Firm Services team. Masha has experience with financial accounting and reporting, financial statements preparation and review, law firm accounting, business management, accounting policies and procedures, development, budgeting, forecasting, and much, much more. And last but certainly not least, today we have Brian Rogers, Senior Manager for our Financial Advisory team. Brian has over 25 years of experience with a background including extensive experience in FP&A roles from multi-billion-dollar corporations and as a consultant for multiple FP&A solution implementations. It's great to have all of you with us here today. With that, I'm going to turn the presentation over to John Sweisberger to get us started.
Thank you, Megan. Thank you, everybody, for joining us this morning. I think this is going to be hopefully a very interesting hour for you as we talk through financial planning and analysis for law firms and kind of go at things in maybe a little different way than you're used to seeing when you go through the process that you've all lived with for many years. A lot of people look at budgeting as a one-time event. Today what we're going to do is we're going to show you ways you can use new technology to make that annual event much easier, more efficient, and more effective than anything you can do with Excel, which, if you're like most law firms, is the tool of choice to go through this annual exercise. But we also will show you how you can use technology to keep a forward-looking perspective throughout the year, even as things change and what is a one-time exercise of the budget quickly becomes out of date. So we'll walk through both the planning part of budgeting as well as the ongoing reporting that can be so time-consuming throughout the year as we go through this next hour. Megan, let's get us started with some polling questions.
Sounds good. So our first polling question will pop up on your screen here in just a moment. It is, what is the biggest source of pain in your budgeting process today? Building a meaningful budget that people pay attention to, getting input on budgets while building them, reporting actuals versus budget, periodic forecasting, or extracting data from my accounting team. So feel free to put in any answer that works for your team on here, and we will close the poll shortly after we've had a few answers come through. And of course, anytime we do have a polling question today, you are welcome to enter in your questions for our audience or for our webinar speakers towards the end. So we'll give you a few more moments to get your final votes in. It looks like we've still got some people putting in their answers here. And we'll close the poll in 3, 2, and 1.
Okay, so kind of widely spread responses, which is not, I guess, altogether surprising to us. But getting input on budgets while building them, the collaboration process seems to be where the most significant amount of pain is. And frankly, that is not inconsistent with what we see when we're out talking to people in the marketplace. the common kinds of pain that we hear in complex law firm environments is, how do I get this done when I've got, pick a number, 15, 20 different offices I'm trying to get planned, or I've got 8 different practices that have very different revenue models, and what happens in the insurance defense practice is so completely different from my M&A transaction practice, and what is important in making one of those practices work is very different in making a different practice work. And so as you get into the kind of complex environments that so many of you live in with those kinds of complicating factors, being able to collaborate and get this done in a way that works both for the people who are having to do their version of the budget and for you who are having to do the consolidation and roll-up of those budgets, that's where that collaboration can really be complicated, and you end up going back and forth a lot. The other part of it that I think we hear an awful lot of when we're out talking to people is, okay, it's great, but business conditions changed. We had an attorney group or an office depart, or we've got this opportunity to bring in a lateral practice. What's that going to do to our budget? What's it going to do to our cash flow? Because we may need to do some investments here mid-year that won't pay off until next year. My partners want to understand what's that going to mean at year end for me. So being able to roll through those kinds of things that come up, not uncommon in a law firm business year, can become really, really complicated when you're trying to analyze that and having to do one-off Excel spreadsheets. So what does that typically end up looking like in practice? All right, so let's kind of walk through the classic law firm budgeting process. So it starts with accounting sending out a complicated Excel spreadsheet, workbook, lots of instructions, goes out to all the different practice groups, and the partners fill in the workbooks as best they can. Some of them are saying, I need to show really good numbers, so I'm going to take an optimistic view of things. Others say, I'm not about to commit to any numbers I know I can't hit, so I'm going to take a pessimistic view. Others say, well, let me try to take my best first real shot at it. And then it kind of gets emailed back into accounting, who does the first draft of consolidation. But inevitably there's some broken cells because people decided to add things, and we get the dreaded #ref error. So emails go back and forth a bunch of times. We got to fix random changes. It gets consolidated up, more questions. So back out we go for the second round of things. And practice groups say, well, I got called on the carpet for my pessimistic one. I'm going to change that to realistic. And people start changing their scenarios a whole bunch. And the emails go back and forth, and our storage is going up and up and up in our email server. And we get more changes and more people breaking cells in our consolidated view of things. And we got to go back and forth and get those fixed. And on down it goes all the way through, and people start saying, fine, I'll combine my realistic and my optimistic and make it real optimistic or optirealistic or whatever. And this kind of goes on, and I'm not probably talking about anything you haven't lived already. And eventually version control just kind of spins out of control. Finally, everyone gets tired of it and declares it finished, and we do an exec review and upload things into the practice management systems, and everybody breathes a huge sigh of relief until business conditions change, and So rather than having something that's irrelevant by April or May, there is a better way. And as good of a tool as Excel is, it's also now old enough to drink and vote by several years. It's about 25, pushing 30 years old. And in the world of software, that makes it beyond senior citizen. That makes it quite creaky at this point. So there's a number of software as a service-based tools in the market today that streamline the budgeting process. We kind of want to walk you through what one of them does. This is a tool called Adaptive Insights. It's in the Gartner Magic Quadrant, and in addition to what it can do from the planning side, it also extends into the reporting side. So with that, I'm going to pass this over to John Dunnigan. John?
Thank you, John. So we're going to start with talking about some personnel planning issues, because I know that was one of the was the second biggest issue right after collaboration in the poll we just did. So we're going to talk about personnel planning first. Then we'll talk a little bit about revenue planning, and then we'll get into some operating expense planning. Not that these are by any means the only issues regarding budgeting and forecasting. We want to just kind of give you all an overview and give you a sense of how things can be done better and some different tools we can use to do that. Talking about personnel planning first, as John was saying, typically this is all spreadsheet based. And as John referenced some of these problems. As these spreadsheets get emailed out, there are update problems, there are cell references that make it very awkward. To the extent that you need to export data from your accounting system, your payroll system into the Excel files, that can become very, very difficult. As changes are made to the personnel, I mean, we all know that, when you're managing a business or a law firm, as these changes happen in the business, people are hired, people leave the company, leave the firm. You constantly have these changes that need to be made. It's very hard to see these impacts as it rolls up. And, as you all saw from the number one answer on the survey, collaboration is probably easily the biggest challenge. Emailing spreadsheets back and forth, going through multiple versions. John didn't say it, but of course, we all know the first round of the budget draft always has too much expense and not enough revenue. So you always have to deal with that problem as well. So and personnel, because this is by far in a law firm the biggest single expense, is a particular point of pain for most law firms. So let's look at how you might do personnel planning in an Excel file. And this is just a simple example of what an Excel file might look like. We've got some employees on the far left. We have Sally, some new employees, some variable employees. We have titles, FTEs, and this is what your spreadsheet might well look like. And as you do this, it's very easy to make mistakes and have all kinds of errors crop into these spreadsheets, and they're not necessarily easy to understand. Don't know if you noticed or not as you're looking at this particular file, but if a few things immediately do jump out as a little odd. As you can see, the effective merit, the date of the merit increases effective date is totaling up, which obviously is, so you end up with a nonsensical July 3rd, 2130 number or date. More importantly, the benefits calculation in this little spreadsheet is incorrect. There's someone into this file has introduced a little cell reference. Benefits are supposed to be 9%, but for all of you who are on the accounting side of life, you multiply 9% times those salaries and you don't get any of these numbers. And that's not immediately obvious. I mean, numbers are close, but when you roll up a large firm with a lot of people, those numbers can very quickly become very, very error prone. We're going to show you in a moment, we're going to do a demonstration of using Adaptive in some better ways and how we really can control these kinds of problems so that these types of errors don't creep in, because there really is a better way. Excel will never go away. We will continue to use Excel. I run the Adaptive practice, but I use Excel every day, and you probably will too, I suspect. But it does have some serious limitations. As we talked about, as you try and collaborate and send files back and forth, that becomes a very, very awkward process to do updating. Security in terms of people having access to a lot of information on Excel files, which are scattered across all kinds of people's laptops and computers. John talked about this a bit with people overwriting formulas, so that when you don't know what a number is, so you don't know the formula, so people just type in a hard-coded number, and then when you try and update the budget, of course, that number doesn't change because the formula's been overridden, and consolidating numbers back up is a huge problem, because you have to take all these Excel files, and whoever in accounting or the finance department is required to consolidate all these files, of course, they're spending all their time just consolidating files and not much time actually looking at the numbers and trying to determine if they make sense. So when we show adaptive, you'll see how cloud solutions can really streamline the process by having preset formulas. Collaboration becomes very, very quick and easy. You can easily centralize assumptions, and you can protect the sheets, the individual sheets. So we just talked about some of these. I'm not going to go through them a whole heck of a lot again. On the revenue planning, you end up with a lot of the same issues. In law firms, revenue is directly tied to headcount because at the end of the day, revenue is very heavily based on hours times rate. And so it becomes very much a personnel and revenue are very tightly intertwined. So you've got all of the same issues around planning revenue, around time and materials, but you also have fixed price. You have contingencies. You've got lots of different models that different groups use to do their revenue. You have rainmakers and business developers who often don't have a lot of input into the planning process as they're out there driving business. Actual performance is very hard to keep track of, and that's why it becomes very, very important to do the forecasts and do ongoing forecast updates. Those business changes in John's simple budget model, we got the that's a real problem. So we're going to talk about how to get around that as well. In addition, multi-versioning is critical because in Excel it's very hard to have lots of versions of the budget, but when you're talking about an adaptive and online tool, you can very easily address a lot of those multi-versioning by having multiple versions of the budget or the forecast simultaneously. You can do what-if scenarios. If you're looking at opening an office somewhere, a new office, if you're in Chicago and you want to open an office in California, you can look at what that might mean to your business. If you're, hopefully not, but if you're in a scenario where you need to look at reducing staff, reducing offices, you can do those types of what-ifs as well and very easily hide that information so that only the finance or very small select group of need-to-know people can see a lot of this information. So those are the things we're going to be talking about. And with that, I'm going to turn this over to Masha, and she's going to walk us all through some personnel planning and some revenue planning to kind of put a little meat around these bones that I've just been running through here real quickly.
Hello, everyone. Thank you, John. And as John mentioned, Adaptive is a real-time cloud solution that allows for collaborative planning, and it also allows for one master consolidation sheet of the budget that is dynamic and that allows supporting schedules, as many as you may need. And it's also has a remarkable ability to do different scenarios. If you have an upcoming merger and acquisition, or if you have a different hiring level, you will be able to see those results as well. So now let me walk you around Adaptive a little bit, and let's start with the staffing area. So with the proper setup, you can easily plan for both revenue and personnel at a law firm and have different scenarios that you can later compare with the actual numbers. You may have as many versions of your budget as you would like. So for example, here I have 3 versions: realistic, optimistic, and pessimistic, and it's just very easy to add and remove certain positions and assign appropriate costs to them. And you shouldn't be concerned with the privacy if some unattended users will find out about upcoming organizational changes, because all these versions are protected, as well as the planning element of each version is protected. So good planning starts with the details. You might want to be as specific as possible and plan by each person, like right here, and assign all the relating costs to them, like bar and paralegal dues or benefits, and you can put them as absolute numbers or do certain calculations, or malpractice insurance over here. What's also important is the start date, and the way it works in Adaptive is you enter it only once and in one place, and every cost will only kick in if the person is actually, during the time the person is actually employed by the firm. And all the expenses that are yearly expenses like salary will be prorated accordingly. Also, it's very useful because you can calculate the raise percentage and date of the raise as well for the staff. Now, as I said, you might want to plan and see actuals as granular as possible. For example, here in the reports, and you can go to all your sheets and reports and everything through this menu, but I already have it opened up for you. So if you go to the reports over here, I have this report that is represents a net income statement by just one matter, matter 6, and all these hyperlinks are drillable, and you can drill into, for example, the direct salary that were allocated to matter 6, drill more into the formula and see how it was calculated, and see the cost driver that was used and the certain staff that contributed to that particular matter. So it's very easy. But imagine that some law firms will obviously not plan by the matter or by the matter types, but they will definitely be very interested to see how the actuals by matter or matter types flow through the entire year. But they might plan by their human resources. So we can go back to that sheet that I showed you before, and you will see that we assigned worked hours to every attorney. Now, as you remember, here's the associate number 6, and he started on March 22nd, so he didn't work the full year, but he has a total yearly requirement of worked hours. Adaptive will only key in the portion of 9 months and 9 days of that number into the budget. You also might consider the fact that the freshly hired attorney will take some time to figure things out and will not have any billable work for a couple of months. And that's what you can program on the assumptions page sheet. And you can also enter through the main Navicon menu and go into your assumptions over here. I have it already opened. And here you can program absolutely every assumptions that is unique to each version of the budget. So for example, here I have all this payroll statutory requirements that are entered over here, or like the percentages of payroll taxes and the limits and stuff like that. I also have attorney rates. And attorney rates here in this model, I did by the attorneys, but you can do it by the engagement type, by both attorney engagement. It's really all up to you, however you would like to track it. Now, I also have the bar dues, and we all know that the bar dues are unique to each state. In California, it's pretty straightforward. It's just one amount due on one date. But in the state of New York and Illinois, they all depend on the year of admission. So it's really hard to keep track of all of that, especially if you have multiple practices in multiple states. And if you go to this planning sheet, you will be able to see that, for example, in New York, different bar dues were assigned to these attorneys, and they will calculate accordingly into the spreadsheet. Another assumption is about your billable rates and billed hours and collected hours. We all know that not every worked hour will become billable hour. Not every billable hour will become billed hour, and collected hours will be probably less than billed hours because there will be some write-offs on pre-billing stage and after billed invoices are submitted. So all of those assumptions, all of those percentages can also be keyed in over here in the revenue planning, and it also is unique to each version. And here you can see that I also assigned different percentages to attorneys and paralegals. What's also good about this spreadsheet is that the assumption page is unique, and it's controlled centrally, and it's only available to certain people, so the budgeter, when he or she enters the budgeted numbers, will not be able to change that. And each attorney can also be tagged, and not only each attorney, each dimension really can be tagged by location, by practice, by meta type, by any characteristic that you would like, and you can run meaningful reports based on that. For example, here I have this report, the scenarios revenue of planning, and you can see different versions of the budget. And for example, we have $17 million in the realistic scenario that we're going to make. So you can drill into this as well by all these different categories like clients, regions, locations, practice, so on and so forth. So for example, if you want to see that $17 million, how it's sliced and diced by the practice, you click into this and you can see different practices that brought in this money. You can go back, or you were able to drill even further, and you can, for example, drill by the positions and see who brought this money. Or you can also drill here and see the quarters, how this divided by the quarters. Or you can drill into here again and see it by the region. Now, what's worth mentioning is that here in this model we have 3 countries, USA, UK, and Canada. And what's good about this system is that you can plan in domestic currency if you have a decentralized accounting department, and then it gets consolidated in just one currency, in one reporting currency, so that you can immediately see, automatically see what's it in dollars. So this is in a nutshell what I wanted to say about revenue and personnel planning. Adaptive really just allows you to slice and dice in all different dimensions so that you can see which matter, which practice, which location is profitable and which one is not. Thank you.
Hey, Masha, before you go, a couple questions from the listeners. Maybe you might want to address.
Okay.
Sure. So the first question that came in is the columns that you're looking at when you're doing the personnel planning. If they want to plan differently, how customizable can they change those and make those be to what they want it to be, or is this the way they have to look at it?
Absolutely, they're absolutely customizable. You can add as many columns as you would like. You can even add a time span in this model sheet and see it divided by months. You can add as many columns and remove as many columns as you would like. It's absolutely customizable, and you can put the formulas in as well.
Okay, thank you. So one of the other questions was, and you kind of touched on this a little with the international, but can you set up rates and taxes by the different states? Because I guess whoever's asking the question, they probably have offices in multiple states. So how would you handle that? Is that
yes,
like New York, Chicago, San Francisco, whatever, Los Angeles, whatever they've got?
I'm sorry, so not the currencies. What's the question again? I thought it was about the currencies. Can you repeat the question, the last part?
No, it's about the rates and for the like tax rates in various states.
Oh, yes. So it's also absolutely customizable in here in the assumptions. You can put as many rates as you would like, and these assumptions are also not set in stone. You can add new assumptions like, I don't know, like the tax rates of different countries and different states, yes.
Okay. Another question we have is they're coming in here. I guess they've got like staff levels and for attorneys, associates. Can they just assign if they don't want to list out every associate or every employee, can they just do it by like classes of employees for both pay rates and for that matter for the billing side as well and the revenue side? Can you just do it by like revenue by personnel class or by
yeah.
level or by title kind of a deal? Can you plan that way as well?
Yes, you actually here I created a dimension which has just a position type, and you can eliminate this column completely and just put your different position types without even having any names. Say you have a brand new law firm and you haven't hired anyone yet, so you can just be less specific. You can be as much specific as possible. You can also be less specific. That's absolutely possible.
Okay. And I guess the last question we've gotten right now relates more to the revenue side. You talked about revenue by head count, basically by an hours based. What if you have like fixed fees or revenue by matter or by case kind of a model? How would can you look at it that way too? Do you have that flexibility?
Yeah, so this particular report, I actually planned one matter because I know some insurance companies would like to see what this matter is going to cost the firm, and you want to see if you would like to take on this engagement. So you can absolutely plan. Here I have another planning sheet where you can plan your matter, your different matters, and allocate in each month what associate will work how many hours on the matter, and calculate the percentage of the collected hours on that. And that is incorporated in this report that I just showed over here. And their direct salary is allocated based on the various cost drivers. Well, direct salary is allocated based on the billable hours by matter versus the billable hours worked by this particular attorney. But indirect costs, if you also would like to allocate, you can take billable hours. So yeah, I have the overhead costs right down below that are allocated based, some of them are allocated based on the square footage and some of them based on the billable hours. Another thing that, and I was going to talk about it later, is that cost allocation in adaptive is really simple as well. I will show it to you in the next part.
Okay, thank you.
So we'll switch it back to us over here and pass it back to John actually for operating expense planning. Thanks, Masha.
Okay. So we just want to spend a little bit of time talking about operating expense planning on the other side of that as well. And obviously when you're doing the operating expense, which tends to be a very different model, but it has a lot of the same inefficiencies built in. You're trying to coordinate expenses across the whole company. And these are everything from rent, office supplies, telephone, IT costs, all those types of operating expenses that aren't directly tied to people, but a lot of times they are related to people, particularly like IT costs and telephone costs, things like that. So again, I mean, what you need is a little more flexibility to do, for the individual department managers, practice leaders, whoever's doing the budget, the partners. They need some more flexibility to be able to really drive these, but you still need to be able to control a lot of them centrally, particularly things like, rent is obviously allocated because that's usually just for the office, but a lot of expenses you want to allocate by person, which especially things like, telephone costs per person, IT costs per person, things like that you want to see. You want to be able to do both of these, have this flexibility while still controlling a lot of the assumptions. And in Excel, that's very, very difficult, as I'm sure you all know, because it's very easy to pass these Excel files out and they get changed very easily, and the assumptions get changed, and then you have inconsistent assumptions across multiple versions. So we want to spend a few minutes, let Masha come back on and talk about some of the operating expenses and how that might look in adaptive in some ways, the way you might want to look at that.
Thank you, John. So yeah, the operating expenses are obviously, your overhead is a very substantial part of your expenses, and you want to plan for it as accurately as possible. So you can.
Masha, sorry, you're a little bit quiet there. If you can pull your mic a little closer, maybe.
Okay, is it better?
Oh, perfect. Thank you.
Okay. So you might want to plan for it as accurately as possible for your overhead, and here's, for example, by part of the income statement in adaptive. And what's also you can see is that the green part is actuals, and the rest starting from April is your budget, so you can quickly see if you are actually on the right track. Maybe you can adjust some numbers. Another thing is that each department is planning collaboratively for the budget together, and here you can see all these departments that contributed to the budget. And in particular, now we see the facilities department of the state of New York and all of their expenses. Now, I'm an accountant, and I'm interested to see, for example, for the rent expense, what I have for each location. So I can just view this rent expense by level, which is a department in adaptive terms, and see all the rent expense everywhere. Now, I want to be able to adjust, say in California, it's really 44,000 actual. So let's see, we can adjust this to 44,000, and then ripple it to through the remaining months. So what's also you might notice is that the blue cells are the cells that only I can see for right now because the change has not taken the effect. And imagine if you were a budget consolidator, what John was talking about before, and people are sending you all the spreadsheets, and you finally feel good about the budget, you consolidated it, but someone sends you the change, so you need to open that spreadsheet again, where links probably will be broken by now, and you see that you need to locate the change, you need to incorporate it back into the budget, and it's just such a painful process. What here is just all you need to do is press the save button, and it's all keyed into the budget and the areas where this number shows. You might also see, okay, in July you know that there will be a rent increase, so you adjust this number by the rent increase, say it by $2,000, and then you can also do it this way. Another thing is if you have a year-end number and you know that you want this year, whole year number be different, you can change it for the year. Say you want it to be 180,000 instead of 190, you changed it, and then you can break it back by all these different options that Adaptive gives you, or you can even create your own new rule, but I'm just going to break it back evenly to all these months, and you see that the numbers changed as well, and now it's $180,000 for the year. Now, if you would like to be, if you are a more visual type of person, you can add some visualization on the sheet, which is available right over here. I already kind of added some visualization over here. You can compare your different versions, optimistic with actuals and the budget, and for May you can see 3 numbers, or you can, if you need more visualization even, you can press into the spark lines and see the trend on the graph. So there are multiple ways how you can play with the numbers in Adaptive really easily. So also what's possible, and I mentioned before that different currencies are possible as well. And what's also great is that, say you have an IT department and you would like to allocate the IT costs to the legal department based on the cost driver of the headcount of the attorneys. It's very easy to set up this rule in Adaptive in the admin page, and just set it up and it will automatically be allocated. So this is also, to sum it up, you can collaboratively plan easily the cost, your overhead, and assign and allocate those costs easily to different departments. That's kind of just sums it up.
Thanks, Masha. We actually got a few other questions. John, I think I might direct these towards your direction there. So we've gotten one. Sure. I assume expense and revenue line items can be locked so that practice group leaders or department managers, et cetera, can't adjust them. Is that correct?
Absolutely. If, on the sheet here, you can see the numbers that are, or the cells that are white can be changed. Anything that's gray or the background is gray or blue cannot be changed directly on the sheet. And when Adaptive is set up, you completely decide what numbers you want people to be ability to change, which ones you want to lock. So yeah, you absolutely have that control. Those are set centrally by the finance department, and then when it's pushed out, you have complete control over who can see what.
So I can adjust those those privileges so that certain people, my managing partner and practice group leaders, can make changes, but other attorneys maybe or accounting people can't. Correct.
That's
I
correct.
can do that by level. Or...
Yeah, it's absolutely. It's by person actually. You can set it by person and what they can see. Same thing true with sheets. You can lock sheets, so if you don't want people to see the personnel sheet, they won't be able to see the personnel sheet. They'll only be able to see the expenses, operating expenses, if that's what you want. If you're afraid of people seeing personnel costs if there's people you don't want to see personnel costs, you can lock them out so they can't see that. You have a tremendous amount of flexibility as to control what people can and cannot see.
Thanks, John. And another one that actually came in during that second demo from Masha, is there something that tracks the changes that you've made so you know what the changes have been made since your original budget?
Yeah, Adaptive has very good audit tracking reporting. So on any change, you can see immediately who made the change and when it was made. So you can run reports, you can look at what happened. You can even come in on Monday morning and run a report of all the changes that happened over the weekend if you want to go back and see, who was in the system and what updates were being made. So they have tremendous reporting capability to track changes.
And just one more here really quick before we move on. Using the rent increase example, where are comments added?
So you can add comments one of two ways. This model doesn't have any, but you can add comments very much like you can in Excel. You can add little cell notes, and you'd see a little red triangle up in the right corner telling you there's a note. You can also add footnotes and sheet notes. So if you have broader notes, you can add those as well to the sheet. And yeah, I see Mosh is adding a quick note there, and you can see how that would look. So yeah, you have tremendous ability to add notes, and those notes do carry up to the top. So if a particular practice manager makes a note, that note can be seen by their supervisor all the way up to the consolidation and be included in reports if appropriate. So yeah, tremendous amount of flexibility to add notes. As you can see, Mosh is typing a couple quick notes right there.
Perfect, thank you. So we will move on actually to our next section, which we'll kick it off with our next polling question, which should pop up on your screen here in just a moment, around monthly management reports. So the question is, how efficient and effective is your current system for producing monthly management reports? Kind of a scale there from not at all, I can't stand it anymore, marginal, I've made it work, but only through brute force, decent, it's fairly efficient if we stick to standard reports, or best in class. It's automated and flexible for ad hoc analyses. So we've got a number of people already putting in their answers. You guys are eager on this one. Of course, we've gotten a lot of questions so far. If you have any other questions from anything that's been covered so far, or anything that you haven't seen, feel free to stick those in, and we will answer all of the questions. We might not get to all of them today, but if we don't, we'll answer them offline. So we'll go ahead and close the poll in just about 3, 2, and 1. And get those answers up for you guys so you can see how everybody stands.
Okay, so yeah, we see for what is it, 53%. The reporting is decent. I guess which is kind of what you'd expect, and or marginal, I guess, is the next biggest category. Not surprising. Excel is, while it's incredibly flexible, it is very difficult for controlling reports and sending out information, providing monthly, kind of the monthly management reports, because it's not really designed for that intuitively. So not at all surprised that people can make it work and they get some decent information, but it does tend to be very slow, as we find our clients tell us all the time. So yeah, very, very, very consistent with what we hear all the time. Okay, so with that, we actually want to spend some time talking about reporting and do a quick demonstration on that, because truly reporting is one of the real strengths of adaptive insights, adaptive planning. And it really does what drives the process home, because you can have great budgets, you can have great results, but if that information is not available, it doesn't really help you a whole lot. You can see on this screen some of the excuse me, some of the basic problems with the current reporting. This is typically what you have in Excel. Accounting systems have good, very canned reports for the accountants, things like trial balances and basic information, but clearly not good for management reporting, providing information at a summarized level that means something to management, to practice level, people who run practices, people that are running major portions of the business or offices. Invariably when you get a report, it triggers all kinds of questions. And so then you have to come back to accounting, finance to get the answers, and you get this back and forth process, which is very time consuming and very inefficient when you need to get information right away. And you spend a lot of time, the final point is a lot of time spent building and formatting reports. So again, it's a question of, you're spending your time doing number crunching rather than really understanding the numbers and what it really means to the business, and using that information to drive future decisions and drive the business forward. So with that, and with these in mind, we want to jump into some of the reporting. Brian is going to look at this part of adaptive and some of the options you have there, because this is truly one of the real strengths and one of the really cool features of Adaptive. So Brian, why don't you show us what you got?
Yes, thanks, John. Yeah, so within Adaptive, you've got a lot of options. You know, these good solutions, really they provide, I think, 3 different things that are key, and that one is providing visibility for your results for your firm, a sense of, you know, self-service options, and really getting it more efficient, making it so that you're not painstakingly moving numbers between solutions, recreating spreadsheets. You really want to make that efficient. In this example, I'm just showing a dashboard which can be configured for any given person in the organization. In this case, perhaps I want to evaluate my net income by partner. I want to have a pie graph showing my expenses. I can see it's dominated, of course, by compensation, but I can toggle through these different pies. I can drill into anything on here. I can get a quick look, perhaps, as to where my utilization is by attorney or associate attorney, and some gauges, charts on margin. And again, you know, these could be set up specific to anybody's use in the firm. When you look at reports, a lot of different options out there. This is a report we see a lot. We think is very effective for our clients. In this case, we've got your standard month and year-to-date variance analysis. We've got actuals, budget, percent variance. But we've also got a relative icon here relative to this variance over here. So we can say, hey, if the result is in between these levels of the variance, put a yellow flag. If it's in a different, you know, area, hey, put in a red flag. And this is where we can also share notes, whether you're pulling it like Masha had in her spreadsheet into, you know, this report, or it's actually a footnote on the report. We can drill into this data. You can also run these kind of reports however you want for the levels of organization that we've actually set up in your solution. And you could certainly pick a different month and run that by hitting the green arrow. And these reports are set up with a drag and drop, you know, very logical, very intuitive. Can immediately, you can see I just set one up for April and April year-to-date versus budget. And you can easily send these to Excel, to a PDF. I could email them to anybody who has access to it. A couple other reports that we see used quite a bit that, you know, again, in Excel you might struggle with to some degree. Maybe you have a 12-month rolling report where you want to see results from, say, through February of next year, combining actions and plan perhaps, want to compare to a couple years. You can very easily select a different period to start with and see what that would look like compared to those years. And we could put whatever we want on these in the rows and columns. Very easy to manipulate and drill through. You know, in this case, you know, let's look at payroll like Masha had in her personnel model. I could actually then just continue to drill through and see where these numbers came from the model. And again, like John mentioned, you know, we have the ability to view an audit trail on any given piece of data. But really, I think the smile and reporting with is really automating this process where you say, look, I've got this great package in Excel. Maybe it's in Word. Maybe it's in PowerPoint. You do a monthly package. It's a quarterly package you have to review with the partner group. You want to share it with everybody. And maybe it's a workbook. It's got a P&L. It's got some metrics. This is a package that's updated through March, and it's dynamically connected to my Adaptive Insights solution. So I've really made Adaptive my one-stop shop for all my data. But let's just say, okay, here's my March package. That's great. Now I'm into April, and I want to see what this looks like if I updated it for April. Well, instead of downloading massive amounts of data and manipulating all kinds of spreadsheets, I can go into my book properties. I can say, here we are at March. I want to simply select the end of April. I want to say OK. And then I want to go over here and say, refresh all sheets. And I'll give it a second, and it'll update from my Adaptive Insights solution. Now you're looking at April versus the actual, the plan, the variances. My entire book now is done. I haven't gone through another data manipulation process. I've simply just updated the existing book, set up linkages to that book. Here's my P&L, here's a balance sheet, and here's a cash flow. And this really sets the foundation for other triggers that go into Word and that go into PowerPoint. We don't have a lot of time to get into that today, but this is the basis for automatically updating those documents as well.
Thanks, Brian.
And with that, I'd like to send it back to Megan. Yeah.
Perfect. So we'll actually, we actually do have one quick question before we move on, and that is how are actuals populated?
Sure. So Brian, I'll talk to that for a moment.
Sure.
There's actually a couple different ways you can do it, and it really kind of depends on how large your organization is. For most organizations, we actually just we have connectors we've pre-built for a lot of the general ledger systems, accounting systems. So essentially, the connectors in the back end, we connect Adaptive directly to your ERP system, and then you decide how often you want to update it. Most people will update it. It can be done every night. Most people, because we're talking about accounting, typically is not done every night. It's done maybe weekly or at the end of the month, but it's a direct connection to your ERP system is how we generally do that. You can update it via Excel if you're not doing it very much. You don't have a whole lot of data. That works for smaller organizations, small law firms, but if it's a larger firm, it's a direct connection. The other thing I guess I should just add here real quickly, we're looking at accounting data, but of course any operating data can be pulled in as actuals as well. So it can be things like billable hours. It's obviously a very common thing for a law firm. We can pull that information directly out of the system you're using to track your hours and your billing. It can be client billing. It can be AR. It can be even other operating statistics you want to use are accounting statistics like square footage, FTEs, things like that you want to use for allocating expenses across departments. So you have a lot of flexibility. Essentially, if it's a number, we can easily set it up and bring it in and use it just as you would in Excel with a formula. So the connections are generally done on the back end. It's a one-time setup and mapping. If you have a law firm that has multiple offices, if you combined offices over time, you have multiple general ledgers, that's not a problem, or multiple charts of accounts, that's not a problem. We can map those together into a single reporting instance and consolidate all the reports very, very easily.
And we'd be able to set that up at different integration levels. So for example, I want to see daily cash receipts, I want to see weekly billable hours by person, and I want to see monthly financials. We can pull over data at different points in time, correct?
That's correct. Absolutely. That's typically how you operate the business, right?
Exactly.
Yeah.
Exactly. So I think you can see that this is certainly something that can do an awful lot of the heavy lifting for you. So much of the time that we talk to law firms, firm after firm is talking to us about the same thing in budgeting. Make it easier, make it faster, make it better. And what does better look like? If I kind of walk back through what we've talked about today, in our first poll, nearly half of you said the biggest pain points around collaboration, getting input on budgets while building them. When you're multi-practice, you're multi-office, and you're trying to get so many people engaged in that, I think you can see how these tools can really make life a little bit easier from the collaboration standpoint. Better also looks like being able to be focused on what does it all mean, not so much on getting the numbers to tie out and making sure my cell references are correct and all of those mechanical things. Let's look at what it really means and be able to use it as a tool for decision making that can live and breathe with the firm as things progress throughout the year. And that, I think, kind of reflects our second poll question, where 3/4 of you said basically either marginal or decent. Don't go beyond standard reports in our current process because then it starts to get really hairy and complicated. So if we can be able to focus not on how we get things done, but focus on what does it all mean and be able to make decisions, it's not a pipe dream anymore that we can be focused on the right kinds of things instead of having to just do the core mechanical work. So with that, we'll kind of wrap up the prepared remarks. Megan, do we have any other questions that have come in?
We certainly do. We've gotten a lot of questions today.
That's good. Thank you.
So John Dunnican, I will direct this one towards you actually. Do you find that people who need financial data use these reports instead of something published from the accounting department?
Absolutely. What Adaptive really does for you is it really allows your business leaders to become self-service. A practice leader or an attorney, an office manager, the managing director of the firm, whatever it is, they don't need to constantly be going back to accounting to get information. The information is right at their fingertips. This is a SaaS-based product, so they can be, you can be beyond, you can be, sitting at your beach house in Malibu or Lake Tahoe or Upper Peninsula of Michigan or wherever you are, and if you want to see data, if you have internet connection, all these reports are available to you. Dashboards are available. It becomes a very self-serve tool so that people know the information right away and it's immediately available. You don't need to rely on accounting, finance, and be constantly publishing information, going back to them all the time. And that really can transform how a business operates, because it's a whole different way of operating when the people that are responsible for managing the business have information right at their fingertips, rather than constantly having to go back, as I say, back. I mean, nothing wrong with it allows the accounting group, more importantly, also then to focus on understanding the numbers and doing analysis, as John was saying, rather than trying to crunch numbers all the time. Crunching numbers is obviously important, but it's not a very value-add practice to spending a lot of time putting together Excel files. But if you can spend that time instead really look at how the business is operating, what the expenses are, what the revenue is, cash collections, receivables, whatever the key drivers of your business are, rather than worrying about crunching numbers, that's a huge win for everybody.
Thank you, John. And John Sweisberger, I think that you might be able to answer this. We've gotten a few questions about how the solution could work for multi-period or multi-year needs. Can you touch on that a little bit?
Yeah, happy to. Brian showed that a little bit, but the challenge in Excel certainly is, okay, I'm kind of constrained to maybe I can look month by month, January to December. Maybe I can roll that into a quarter by quarter look, January to December, or an annual look, but it's all January to December. And when you get into most law firms are on a calendar year accounting basis, but they may not be on a performance year basis. So I may be doing for my associates, I might do raises mid-year. And I want to look at performance on a July to June basis. Hard to do that in Excel when I'm not set up that way, or even harder if I'm trying to do something that's not even on a quarter end. So I'm looking at a June 1st to May 31st performance year because I want raises. I want to figure out raises in June and make them effective July 1st. That becomes a really complicated exercise in Excel. And so this is one of the, I think, real benefits of this tool is you're not locked into calendar years. I can look at an investment that I need to make in September that's not really going to pay off until the second half of next year. What does that do to this year? What does that do to next year? And be able to have that 15, 18, 32-month look at things. You're not locked into calendar years. So I think that's one of the real significant benefits of a tool like this.
I think one of the other things we see a lot of clients using for is if you have a client that wants information about a particular matter you're working on, and let's say, so you need a report from February 13th, 2013 through today. Try and get that out of your accounting system if that's been the period that you've been working on some particular matter, because it's very odd periods. That's very, very difficult. Well, here you can just very quickly grab that information because it's right there. And so it's really kind of any mix of dates that you want to look at, you can do that immediately without having to spend a whole lot of time downloading information to Excel and kind of sorting in pivot tables and running trying to figure out data.
Thank you both. So that does wrap up our Q&A session today, but thank you very much to John, Masha, and Brian. If anyone has any additional specific questions, feel free to reach out to our webinar presenters. We do have John and John's contact information up on the screen, but as I mentioned earlier, we will be sending out a link to the slides as well as a link to the on-demand recording, so no need to hurry up and write those down. I know a couple of you already know them personally anyway. As you exit today's webinar, there is a quick survey, so definitely please take a moment to let us know your thoughts on today's webinar, and we look forward to seeing you on the next Armanino webinar.